Well, as we know, there are widely divergent views on Wall Street and Bay Street in terms of the economy, the economic outlook, and of course, the markets, which have been doing very, very well in the United States, much less so in Canada. Big question, of course, is will we see a bit of a catch up trade? But bottom line, we want to understand where we're at so we can know how to prepare for our money, our markets, and our opportunity set. That's the basis of my program. And for that, I want to continue to bring in wonderful guests for you, veterans on Wall Street. And we have one today. Gary Shilling is joining us. He's the president of Gary Shilling and Company, a famed economist. Gary, welcome to my program once again. I always appreciate hearing your views and reading your research. So thank you so much for joining us.
Glad to be back, Catherine.
Thank you. Why don't we first start with kind of your top-down view as you look at a number of different economic indicators and trying to figure out where we're at. I mean, as you know, people are saying, are we in a recession? We're not in a recession. Does the word even matter? But it does matter in terms of what happens next. So how are you viewing the current landscape?
I think it's been a two-phase affair. The first phase was largely driven by the Fed and other central banks, Bank of Canada, Bank of England, European Central Bank, etc., basically tightening credit in reaction to the surge of inflation early last year after economies opened after the pandemic. And that drove down stocks, it drove up mortgage rates. It created a lot of changes in an economy which had been used to very low interest rates and fairly stable economic conditions. That phase is not over. The Fed is not through raising interest rates, and they've made that very clear. Inflation is still not back to their 2% target, and virtually every central bank in the world has 2%. Why they do that in unison, I don't know, but they do. But in any event, they're not there yet, but they're closer to the end. And I think that brings us to the second phase, which is a weakness in the economies. And a lot of that is a delayed reaction to what the Fed did and other central banks. But we're seeing that in weakness in profits, in corporate sales. And I think that is what's driving the second half. And that's why I think that equities have another leg down.
To what degree do you think they have a leg down?
Well, we've been forecasting for the S&P 500 in the U.S. that there'd be a 40% peak to trough decline. It did drop off about 20%. It's rallied back, but I still think that something in that range is probably likely because corporate sales and earnings have not been discounted. Stocks are really very expensive by almost any measure. And with the Fed still tightening interest rates, that's always a negative. I think there's probably somewhere in that 30 to 40% peak to trough decline is still there. So that would say you've got another substantial leg down in stocks.
Mm-hmm. Do you think, though, that is the broader S&P 500, because there's a lot of names that haven't participated in the rally? Where are you most concerned, I suppose?
Well, of course, you can always pick and choose, and economists call that growthmanship. You pick the numbers you want, and you can prove almost anything. But like last year, we saw a big sell-off in growth stocks. The discounted value of their earnings way out in the future dropped precipitously as interest rates rose. That's reversed subsequently. But then you've seen other things. And of course, you've seen artificial intelligence stocks just go through the roof. There have been a lot of differentials. Many of the sort of stodgy old basic economy stocks have not participated. But, I think you've had rotation. And I think it's very difficult to get too tricky on the differentiation among the various stock areas.
Mm-hmm. I wonder as well, even these stodgy old economy companies, if, we do continue to see profits decline, and I know you pointed out in your most recent note, it's pretty shocking to see all the the job losses or terminations, you have to imagine that those companies will also falter in their profits. We'll take a quick break. We'll be right back.